In this video, I'm going to review the past few days in the overall market: Apple, Amazon, Tesla, Facebook, Microsoft, the S&P 500, and also NASDAQ. I'm going to go over a trade that I took and then some trades that we took in my Discord community. I'm going to explain something that not a lot of people talk about in the overall trading community, and it's about a balanced market, and it's vital to understand this because not only is it going to help us avoid taking bad trades, it's also going to give us context and a strategy to build a really good system around when conditions permit. And the past 2 weeks or so, the market has been very, very balanced. And there are key things that we have to use to become not only aware of this, but also trade differently. Everybody on this platform just wants to know when the best time to buy and sell is. But in order to be successful, you have to stop following these alerts and you have to know why the market moves the way it does and the reasoning to trade behind it, because that's when we develop a serious edge in the market. Now, a few months ago on my Instagram at Ameritrade, I'm going to post a link in the description below to follow it. I definitely recommend doing so. But I posted a picture on the market being balanced, and that's going to be the basis to this video. We must be open to trading differently in these conditions. I'm going to show you how to recognize them and how to trade this, but we must react, become aware, and adapt to these conditions. And I will say, there will be opportunities in these conditions, but you must trade differently than you are expecting in trending markets. And you also must be aware that these balanced conditions are a perfect environment for the market to control and play with our emotions. We can't let the emotions get the best of us. So it's very important right off the bat to be open to controlling your emotions when the market is balanced. Now I'm going to pull this up again, and what I mean by a balanced market, let me go to a blank chart here and let me pull up my Discord. In the intraday commentary tab today, I basically explained what balanced even means. In the A to Z course, I have a full video on balanced versus imbalanced conditions. Somewhere over here, balanced versus imbalanced days. It's a 30-minute long video. And then I also have a video on different market conditions. And what I want to say here is, just to give you a little snippet of this, is I think of the market like the four seasons, right? This is very, very key because everybody approaches the market every day being the same, not putting into consideration that factor that conditions are going to be different, just like seasons are going to be different. We're not going to go in the wintertime with a tank top on. Or when it's the summertime and it's 100 degrees outside, we're not going to walk outside with a winter coat on, right? We have to be able to tweak our rules a little bit, tweak the confirmations, tweak how we trade, because different seasons bring different conditions, and we must be different in these conditions. The basis to this video, like I said, is going to be balanced conditions. And what this looks like on the chart, I posted this on my Instagram as well, is very flat consolidation. You could see it on a smaller time frame. You could see it on a larger time frame. Balanced is going to be the same. And what this means is that we have an agreement between buyers and sellers. Buyers and sellers basically are agreeing on price, which is why we see this consolidation and the sideways action. It's very normal in any market condition. It's very healthy. There are specific strategies to balance markets, and you could capitalize on quick movements. However, the directional trend trader does not have a serious advantage or edge in the market when we are balanced. If you want to think about it like this, an agreement between buyers and sellers. When we have buyers and sellers basically agreeing on price, we don't have one side of the supply-demand equation winning the battle. So either if you're a buyer, you don't have an upside edge. And if you're a seller, you don't have a downside edge. So neither side has an edge. This is why we have balance, and we have longer term and shorter term participants basically agreeing on price, building value in this range, consolidating, and balanced. When we have balanced, you could look at it as a channel where we have highs and we have lows. So we're basically in a very larger time frame channel. We could also see this even looking on a daily chart. Some might consider this a flag where we're just consolidating sideways for the full month of June so far, and it's been about 7 trading days. So it's been 7 days of the market balanced, And if you approach this market with a directional trend trading mentality, you can still make money. However, no big move will ever come when the market is balanced, because not one side of buyers or sellers is winning that battle. For directional moves, one side has an edge over the other, either buyers or sellers. That's when we get that continuation. That's when we get the large moves. That's when we get trends. So you want to trade on the same side participant, which has the edge. Now, a reason why the market could be like this is if I pull up the economic calendar here, we have very key news such as the core CPI numbers on Friday, June 10th. And we also have the FOMC statement on next Wednesday, June 15th. So the market is going to be expecting a larger move. So this is kind of how I view it as the calm before the storm. Participants, longer time frame participants, are not as active in the market because we are expecting a bigger move. Usually, and we could be talking about this on a smaller time frame, intraday, or a larger time frame. However, the move out of balance usually is the continuation move up or down. And if we peak our head above balance or below balance and move back into the range, that's a sign of responsiveness from the opposing participants. And that's going to give us a key sign to the auction that we could take quality trading setups off of. Now, I've added all my supply and demand zones to the chart, and in balanced conditions, our emotions, like I said, are our worst enemy. Sometimes it enables us to not see the true story of the market, and our brain wants to tell us what we want to believe. And in balanced markets, the best way to trade this is you buy the lows and you sell the highs. When you add supply and demand zones, it gives you a very serious edge. The action from Tuesday, June 7th, I want to go over the pre-market plan. I post these every single day in the Discord, setups I'm watching, levels I'm looking out for. And if we could control our emotions, the accuracy of the levels are very, very high, but sometimes it's our emotions which prevent us from seeing what's right in front of us because, like I said, our brain wants to let us believe something else. So just remain objective, play levels, have no bias, and trade the chart, as I mentioned in my last video. So what we were watching for was the 4085 and 4071 demand zone. I said the market could go either way here. We could break out of balance and continue, or we could break out of balance, attract responsive participants at demand, and bounce. This is why context is important, and I will be looking at other equities to help confirm a direction. We are inside a very large key demand zone at 4085, 4071, and 4055. I do expect a test of Wednesday's lows, and if we could find buyers here to bounce, I'll be looking for longs. Even if last week's lows break, it's very hard to be short with the current information inside of this very large key demand zone. Now, we also had a bearish plan that if the major market leading equities got below these levels, then I would be open to playing puts inside of the demand zone, targeting the next demand zone lower. From the pre-market plan, we had the Apple 143.25 level. On Amazon, we had a 121.68 demand zone. And on Facebook, we had a 191.20 demand zone. These were all levels we were watching the market to stay above to be bullish or below to be bearish. So pulling up the equity screen here, I always have a monitor with these equities right here to monitor market direction and give me more clues for a directional play. So Amazon in the morning hit this demand zone and bounced. Apple held above that 143.25 demand zone and made its way up to 147, which kind of gave it more confluence that the bulls had control and we had no reason to be bearish. Facebook, same thing. Before the market opened up, hit demand. At the open, we rallied very hard and had a strong rally. Tesla, at the time of my long on the S&P 500, this reclaimed 700, and that was the level we were watching for it to stay above. We pulled back on it, held 700, and Microsoft was also very strong. Okay, so now we have market-leading equities hitting our demand zones or above our key levels. With this sole piece of information, We had absolutely no reason to get short on the overall market. Absolutely no reason. In fact, the market sold off into demand and everybody was very, very bearish. I don't know why, but I love to see that because when everybody's bearish, the market always will put them in most pain because when there is the most pain, there is gain for the other participant. Market's a zero-sum game. When somebody loses, somebody else is winning and taking advantage of those losses. So the market opened up. I did not play long at this 4085 demand zone right away. It was too early, and I didn't get enough clues from those equities to give me convincing signs to go to the long side. Again, from the pre-market plan, I said it's very hard for me to be short with the current information inside of this 4085, 4071 demand zone. We were looking to play short if those equity levels did break. Market context right there. So then the market started moving up and we started moving sideways. Now at 9:42 is when I entered SPY long. The reason for this was Tesla got above 700. Apple was $1 away from 147. Amazon was breaking a 1-minute wedge. Microsoft was rallying. Facebook was rallying off demand. If I didn't have those equities exhibiting strength, I would not have taken this trade to the long side. Did I know this was going to work out? Absolutely not. But going back to those balanced conditions statement, to pull up a naked chart here again. Remember what I said earlier. When the market's balanced, it's best to buy the dips and sell the rips. The market all week has been making higher lows, and we also have been making lower highs. That's where buying the dip and selling the rip has been coming into the picture. Now, we were still bouncing off this demand zone, the same one that we bounced off of last Wednesday and last Thursday, came to the same exact low and found a bid. When we had the equity strength, the equities exhibiting this strength, I got confirmation to take the market long. I got long around 40.92. My stop loss was the open of this candle, or the open of the day, about 10 points away. My target, I'll pull up the regular chart, was this 4116 supply zone. So I was risking about 10 points, call it 12 points, to make about 22 points to the upside. So, okay, risk to reward. However, my second target, pull this up here, was this 4136 supply zone, which is the same exact zone that the market failed at yesterday and sold off. Also aligned with VWAP perfectly, right? So we have two factors right there. So now I'm in long. Did I know this trade was going to work out? No, I don't know any trade that I take will work out. However, I know when odds are in my favor and I put risk on. The greatest risk is having absolutely no risk. Then the market started moving up. We consolidated, and I'm not going to lie. I really didn't think this analysis was going to work out. I thought I was going to be in a choppy move, and I thought, keyword right there, thought, emotion, that the market was going to sell off, equities were going to roll over, and I was going to be deep in the red if we did pull back. However, I only sell if my stop loss triggers or my target hits. And I remained objective. Yes, we pulled back right to where I got in at. I was actually down a few $100. Then the market ripped suddenly with volume. Very strong movement into the supply zone. And I got out 50% of my position here and another 50% right according to my plan at the 4136 supply zone. Worked out perfectly. And this honestly was one of my first good setups, I would say, in the past 2 weeks. My emotions the past 2 weeks have been awful. Will not lie. I've been trading for almost 7 years now, and I still go through little sprees that my emotions prevent me from taking good setups, and my emotions also enable me from taking really bad setups. So it's something that I'm currently working on myself. I'm not very, proud of how my emotions have been treating me, but I'm breaking out of it slowly, and this was a very good setup that I took. I followed my plan. I bought when I had to, and I sold when I had to, recognizing the conditions and a higher probability setup of buying the dip. Now, I will say, now that I've just thought about this, is when dips don't keep getting bought up and we start putting in lower lows and lower highs again, then yes, the market has a good chance of selling off and breaking out of balance. Same thing to the upside. When the market starts making higher highs and supply zones don't get respected too well, then yes, we're going to start breaking out of balance to the upside. but this was a very clean setup on Tuesday, following the plan perfectly. And the SPY calls from the time of that bounce out of demand hit about $2.50 and went to a high of the supply about $5. It was a quick 100% return in about an hour's worth of a trade. Very good return. And some people are going to be looking at this chart and they're going to be saying, earlier in the video, you said we don't have any trend moves inside of balance, right? That is completely true, right? However, if you look at a larger picture, zoom out a little bit, we are still inside of this balanced range. Yes, we had a trending move, but the market has not moved out of this balanced longer time frame range. So we are going to get trending intraday moves. I mean, if you look at the past couple of days, we had some moves trending down, some days trending up, some days completely balanced, some days trending up. And then the following day, on Wednesday, June 8th, we had another solid setup, and I did not take this trade because of my emotions again. However, pulling up the pre-market plan, same analysis on this. ES-SPY, this was in the Discord, 2-week long balance. Oh, and I will say, every time I post these videos, I get a lot of DMs asking to join the Discord. The Discord is only available for Investor-Trade course members. It's a one-time fee to join the course. I do not charge for the Discord. I will be making a lot of changes very soon, so definitely take advantage of what's currently offered. Okay, back to this, just so my DMs don't get flooded. The market, again, same scenario, same context. 2-week long balance, lacking continuation and direction, highly manipulated. If you're watching the tape, very manipulated action, algos going like crazy all day long. However, we are putting in lower highs every time we move up while forming supply at 4151, 4161, which is this zone right here. Not only did we hit it yesterday end of the day, we hit it overnight and sold off from it, and it's a key supply zone. I said it's going to be a burden to higher prices. It's very hard to be bullish today at the highs, and I have to remain bearish unless there's a breakout above the lower high, acting like supply is not there. We also had demand at 4132. And if we do manage to sell off from 4151 supply, we must find buyers at demand, or else 4107 will trade and we'll have a large sell-off into that range. So here's my levels of interest. Here's the supply zone. I said before the market even opened up that it's very hard for me to be bullish at 4151 supply. What happens? And in hindsight, reviewing the chart after the fact, we did have a bounce off this demand and we did get a rally. However, I did not take this because if I did get long off of this demand zone, very, very similar to the yesterday setup, identical. My risk in this point was about 14 points to make only about 11 or 10 points. Not a good risk to reward. And I don't take a setup if the risk to reward is not in my favor. So then we got to move into the supply zone. Again, very hard to be bullish inside of this supply zone. I'm expecting it to be very tough resistance and a burden to higher prices. Why? Because if you look at the range, this is the top of the balanced range, right? Look at this. I'm actually going to go to a higher time frame chart. This is the high of the balance range. Every time we make a previous high, we're putting in a lower high. And every time we make a low, we're putting in a higher low. So now we're coming up. Not only are we rejecting supply that formed because of old supply, we're also creating new supply while putting in a lower high. So we just have so many pieces of information that are giving this a red flag to be a long and be a buyer inside of the supply zone. And going to a 5-minute chart, not only did we have a double top, we also had a wedge break and we sold off completely. Strong selling pressure. And what did we hit end of the day? We hit that 4107 target from supply. And I know a bunch of members in the Discord destroyed this setup. I'm happy they did. It sucks I did not, but seeing others win is very, very good feeling. Knowing they're trading off price and volume analysis and working on their emotions while trading the chart. So solid setup on this, solid wedge. I wish I could have been a participant, but the analysis worked out perfectly. And if you develop a deep relationship with price and volume, a lot changes and you can come up with a serious edge in the market. So I'm going to end the video on that note. I know it's a lot of value. I do these private little recaps in the Discord occasionally. I have a private video recap section in there that I have a bunch of balanced trade recaps. But, even looking at shorter time frame, the market in the first 3 hours was very balanced. If you look at this on a smaller time frame picture, it looks identical to the 7-day balance that we're seeing to start June. I mean, this is identical. We're failing at the highs and we're buying the dips. This is balanced right here. We make a move out of balance, and what happens? We get continuation. So use this smaller time frame. Don't only look at it as it's coming down, but just look at it what happens when we break out of balance. We usually get continuation. And if we break out of balance and move back into the range, it's a key sign that something else is going to happen. So if you enjoyed this video, drop a like, comment if you have any questions, and definitely check out the links in the description below. I offer a very in-depth and educational course. It'll come with access to the Discord. And like I said, changes will be coming very, very soon.